Wonderful July 4th. Hopefully folks can hear me. It's not completely messed up. I'll give this. Let's see. There we go. Make sure that there's no static or anything. We should be good to go. Well, I'm going to get right into this today and allow folks to catch up by watching the restream because it's going to be a busy day. It's July 4th. We wanted to make sure that there was going to be a live stream. I applaud Vanessa for coming over. I'm looking at Vanessa right now, the editor, coming over and making sure that I got online and gave you guys this news stream so you guys can wholeheartedly thank Vanessa in the comments for making the trip over to make sure that I am staying consistent for you guys and delivering what's going on in the news this past week. Cool. And also this, I'm going to come right out for the folks that are like, dude, I'm so tired of you just talking to us. Like, show us some mining stuff. I promise you, mining content coming this week. I'm going to show you an update on the BBT mining farm as we're doing the immersion. We have the tanks in. We have some of the GPUs in said tanks. We're working on plumbing right now, but I'm going to bring you guys just a specific produced video on that content. I'm going to show you kind of where we're at, what fluids we're using, the tanks, the dimensions, all of that stuff is coming. So if you do not subscribe, it's a shameless plug if you want to see something pretty sweet. As we're going through this journey, we're going to take you guys with us through the immersion of a GPU mining farm. So these are mining GPUs for all the folks that are going to be triggered, that we're taking a whole bunch of retail GPUs and syncing them. Most of these are mining GPUs. They're RX 470, 8 gig. And then there's some 580, 8 gigs. And we do have some RTX 3080s and 3090s that we're syncing too. But that's more of like our test bench because the flow plates are a little different. But just shameless plug before we get into the news that there is mining related content very specific to GPU stuff, which is why most of you guys that are followers do follow this channel. And we're going to go through some of the configuration and the management of that. Some of our Hive settings that are related to the different GPUs to show some of the optimizations. And then of course, what miners we're using and give you guys some exposure to what we're doing when it comes to what we're mining and what we're intending to mine as the Ethereum moves to proof of stake at some point. So a very focused set of content that's related to GPU mining this week. All right, let's get into this. We got some folks in here. There's really three kind of core points this week that I'm going to cover. And what I've picked out of the news and the different articles that have came out over this past week. So if you guys are not familiar with what goes on, I kind of look through all the noise that's happening throughout the week. I kind of cherry pick very specific subjects that are predicated on the stuff that's around this channel, which happens to do with mining. And I pick those out and we kind of talk and digest them. So three big things this week. The number one thing, which is going to lead us into the very first, I would call it story, is Bitcoin mining difficulty. It has decreased pretty substantially, 28% by all accounts so far, which is the largest Bitcoin mining decrease in history. So miners obviously mine. It sets the difficulty, sets a target predicated on how much is a mining based on how quick it solves blocks. So if Bitcoin's target time is 10 minutes, the more miners that come onto the network, the faster the blocks actually get solved. So there's a difficulty adjustment. I think it's after 1024 blocks, so a little over 1,000 blocks. I could be wrong on that because I just forget things sometimes with that. So give me a break on that one, but I think it's 1024. So every 1,000 blocks or so, it does a difficulty adjustment. So if like a whole bunch of hash power comes onto a network, it's going to solve the blocks a lot faster. It's going to get it all the way down to 3 minutes or so and just bang through the blocks really quick to where it gets to that difficulty adjustment. And then it will make the difficulty higher, which will then level it out to 10 minutes. Well, it does the exact opposite, or it does the same thing on the flip side of it too, that if a whole bunch of mining hash power comes off of a network, it takes it longer to solve blocks, which then extend the block time to just crazy proportions. And what I'm going to show you guys is since the China ban, what's happened, as we get around that June 13th, I think it was like right at the end of May, the beginning of June, when we started hearing that miners were shutting down. And what I'm going to show you guys is the reciprocation of that, the way the network shows you how that works, to where blocks take a lot longer. So let's switch over to where you guys can see this. And I'm going to show you kind of the descending thing with the adjustment here. So let's go over to the big screen here, and I'll make it to where you guys can see it here. So we expand this and go down. You guys can see the dates down there, and I'm going to scroll this over. You can't see the date there. Let me see if I can. Here, I can hide this part here. That way you guys can see it. There we go. We'll just get rid of my face here. So you can see this is the average block time for Bitcoin. And it should be right here down here. This level right here is the 10 minutes. That's the average block time of what Bitcoin's trying to target. And you can see like the spikes here where it's taken longer, and then difficulty adjust, and then it solves very quickly. And then difficulty, as it starts to adjust again, it sits there and bounces around this average. If you were to take this over the splice to about right here, about June 13th, what you would see is the times that it was solving faster than 10 minutes kind of offsets the times that it was solving where it was taken up to 16-minute block time. And then this average over a period of time would be around 10 minutes. But what you saw is when you have a kind of a unobstructed shutting off of mining rigs, you have this situation where on June 27th, the average block time was taking 24 minutes to solve the Bitcoin block. So which just means that your stuff's sitting in the mempool and people are paying more and more for fees to try to get their stuff pushed through. And until it goes to solve itself after that, and we can see, let me see if I can scroll this over here a little further. So yeah, it's starting to decline now. And I just did a search on accident here. Let's go back and forward. There we go. It's now back down to about 12 minutes with this adjustment, and it will continue to adjust. I'm messing this all up here. To where it's going to get back to 10 minutes. So we did see a increase now of block time, or the increase of block time down to a readjustment, and now we are seeing a leveling off of that, which is a good thing. So that's more of a zoomed out there. Let's go back to the main screen here. So what that means is now you have a situation where the miners in the US are making almost 30% more from a yield standpoint, because now there's not as many competing and the block time is back to normal. So think of it like the inflation rate over like an hour period. You should have 6 Bitcoin blocks within an hour, right? So think of what that would, this is like basic math, right? And if there's, 6.25 coins per block, right? And you had 10 of them, and you'd have 62.5 over, let's say 10 blocks, you'd have 62.5 Bitcoin. So you can measure that every 10 minutes, you're talking 100 minutes, a little over an hour, you should have 62.5 coins in that much time. Well, now if you're only earning not 62, you're only earning 40 something coins per block, your yields are less because it takes longer to solve. So now you have a situation where it's not as difficult. So that means the hash power that you do have, you're getting more yield for your hash rate, and it's on the right target block time, which means that you're getting paid appropriately to what the network is supposed to be paying you. And you got the third situation here that I'm gonna bring up, that the Bitcoin price is going up. So we've had it down as low as 28,000 for a little bit, just a brief second, and then it's shot back up to about 30, 31. And right now, today, it's almost pushing 36,000. So you got a 30% increase if you're a Bitcoin miner just in yield, and you have a price point that is increasing, almost 12 to 15% in price. It's a pretty good week for Bitcoin miners if you're in not in China, because they've shut them down. This is where you kind of make up that difference if you were working on a lot less profit. So good for the folks that are still able to mine. And that was probably the largest piece of news this week, specifically because the Bitcoin mining adjustment adjusts so many folks. So let's go to the next thing here to keep this thing moving. So the next thing, there's two kind of things that were around Ethereum and MEV. So anybody that's not tracking, and I'm bridging this with Bitcoin too. It's not as, the capture is not as strong as a smart contract platform, but this is the discussion around dark forest. And when I had a video about the dark forest a few weeks back, I'm going to do a very extensive deep dive into the dark forest later this week in a part 2 where I've already built graphs to explain the different components of it. But bottom line, when you have a crypto network where you are broadcasting what you're doing, I'm a person, I'm sending coins to somebody, I'm broadcasting that on a network for everybody to see. So that hits a kind of a staging area that's called a memory pool. And then predicated on my transaction order, what I'm paying for the fee is when it gets added to a block and that transaction actually posts to both sides, right? It debits from my account, it credits to the person I'm sending. Well, on other networks like Ethereum that are more like a smart contract platform, there's a little more to it because it's not just us sending coins to somebody. It could be that we're sending coins to a smart contract that's going to go execute some stuff. And that's kind of like a stage. Think of it like a steps of things. Like I'm going to take one token and I want to convert it to another token. And then I want to take that token, which is maybe borrowing. So I'm going to do a borrow action. I'm going to buy another token. And then in the end state, I'm going to get some other third party token. So I'm going to do these like canned actions. And maybe it's because I found some arbitrage. I found some ability through the DEXs which is the decentralized exchanges, to find some opportunity. And I've nestled that into a transaction order package, as it were. So you can create a JSON that has all this stuff in it. And it's just like a list to say, go do these things. And I'm going to put that out in the mempool. Well, what happens is you have all these folks that can sit there and watch that because it's transparent. And they can say, hey, that's pretty cool. Maybe I can incentivize, put out this broadcast, and I'm going to incentivize to particular miners that are successfully mining these particular transactions. So it's Ethermine or Flexpool or any of these other F2 pool. And they're trying to incentivize to say, hey, if you get this order that looks like this, run mine ahead of them. Let's clone it, and then I'll pay you a fee to do that. And it kind of gets into this very ethical question boundary of like front running, and then you got back running. There's sandwich bots that people try to poison it with like fake price data through pricing oracles that are giving you price data. And you have like pumps and dumps with that to where you can pump up a token and somebody thinks that they're going to get an arbitrage because it's only priced high on one exchange, a decentralized exchange. And then the whole time they're the ones controlling the back end of it to where they can just completely make it illiquid, and put a higher issuance of a particular token out there. Because it's not fully just, it's somebody minted a new token. They've given it some kind of look like it has liquidity play. But anyways, it's all of this stuff that's in this like order entry list. And there's people gaming that list, bottom line. So that's the dark forest stuff. So I'm giving you some precursor to what these next few things are and what the risk is in this MEV discussion. It's not so much on Bitcoin because a lot of that's just point to point. There's not a lot of nested transaction stuff to where the nested transaction stuff that would be like order entry list or bar tab style transaction where you're making a whole bunch of sub transactions and then you make one post at night of the activity. A lot of that's done in kind of semi-centralized / federated systems to where it's not like a dark forest. It's more like a centralized entity that could technically back those, do something else with those transactions, ban that person, that kind of thing. It's a permissioned and a semi-permissioned environment. So you can onboard with your own lightning channel, as it were, but then if you're interacting with somebody, it's essentially an escrow and somebody can cancel that if they feel like they're getting gamed. So that's why I say it's not fully fire and forget. There's some activity that can be done. When you're talking dark forest, it's more of like you submitted that transaction and you're pretty much screwed if somebody front runs you, right? So there's a few folks on Twitter pointing out this activity. There was an actual MEV discussion forum this week, had Vitalik on it and Hasu and a few other folks kind of trying to put out ideas of how could they fix this. And what happens is at the end of the day, these are decentralized systems or trying to be decentralized systems. All roads are pointing effectively to some level of centralization. And that really is solidified in like ETH2, F2, to where now you're going to have validators that make that relationship with the network. You can get slashed if you're doing bad activity, and you're going to have some level of control that's going to be instituted in these systems to have. It's kind of like you can't have nice things, so they're going to have some kind of controller, and that's been kind of the theme with a lot of this. And that you got a few folks out there pointing out some of these, potential issues that come with it. So if you're going to start to control that, you can have some issues. I'm going to bring up these two threads here. We're going to first start with AlexB, where he's taken more of a position like, hey, based on what I'm seeing, ETH's broken because of these particular things. Now, I don't necessarily follow all these views. I think it's just a different state, but I think he does bring out some concerns here when it comes into staking derivatives, liquid staking protocol network effects, MEV sequencing. So this is where you have that, what I'm talking about, that activity with the MEV, to where now you're having the network be a little more in control, and you could be paying for position with like MEV sequencing, and you're extending that value not just to the people that are executing kind of the MEV advantage. You're actually still paying the network participants in some way with that, because effectively they're saying, hey, you want to do MEV, that's cool and all, but you got to pay me to play now because I'm going to be semi-centralized. You have, single staking DAOs. You have breakouts of people talking specifically to flash bots, which was an attempt to make this more open and transparent. But I'm going to link these threads down here, and I encourage you guys, if you guys are in the Ethereum ecosystem and you want to understand more when it comes to some of the risk. So I'm not taking a position of saying all these are broken. I look at it more pragmatically of these are features that, right, wrong, or indifferent, they're there. How do we want to handle them, and how do people want to participate as part of it? If you have a choice to say, hey, you know what, I don't want to get front ran, and I'm not going to use this network, and that's everybody's choice. I'm not going to call that out as broken. I'm just going to say that this is going to lead, some of the things that are being suggested here is really democratizing MEV, and then, but with this underpinnings that when you move to a proof of stake system, the largest stakers, which are going to be Paragon and some of these like large, huge company entities, we're effectively getting back into the same exact structures that we have in the current financial system, quite frankly. And it gives investors access to a more controlled state of revenues because they now have the control within these smart contracts. The difference between what Ethereum is moving to, predicated on this research that's coming out with it, and even with the statements of people saying it's broken or whatever, but the counterpoint to that, some of this research stuff is saying, hey, well, it's kind of broken of the way we're seeing it, but they're trying to fix it. And then you got people on the sidelines going, hey, this is crap and don't do it. But the difference between the legacy financial system and this is it's still transparent. Like, I can still see it right now. I can see that Paragon or whatever validator is going to get this competitive advantage, and they're going to put in this MEV sequencer, and they're going to be extracting value for their investors that are doing their staking side. And it's a lot more transparent than the current financial system that's all behind a black box. However, it all comes back to that same old adage. Is this really the state of distributed finance, decentralized finance that we're looking at? Because it still gravitates, big money still gravitates to central control of some sort. And we're seeing it play out here. And I'm taking kind of this external view as a participant in it going, is this really what we want? And if it is, then it's going to be this thing. And if it ends up being a transparent version of what we have in the financial markets, then this thing is probably going to go up to very high numbers, but it's going to have another state of level of control that's not decentralized. And that's what it really comes down to. Is ETH going to do this? Is it being controlled? Is it being swayed in this particular thing? I think just keeping up with this kind of research, trying not to troll, just saying, hey, calling it out, I think is the way to do that. And we can see how that type of behavior, looking at another specific thing that I'm going to bring up, is Chainlink God brought up a particular, as he's seen it on chain, he saw a particular thing going on with MakerDAO that he thought was paying for position when it came to oracles. And this is when we get into like the pricing oracles, to separate for folks that are not fully tracking the crypto stuff. You have like the miners, you have And ETH2, you're going to have like validators that have put up stake. You have the memory pool that kind of sets what happens to all the transactions and how they get ordered and stuff like that. So you have a lot of gaming that can happen in that memory pool stuff. That's what we're talking about, MEV. But then you have all the data inputs that kind of set off to the side that establish price, establish information of what's going on these different stacks, these application stacks. So when we start talking like pricing oracles, like their job is to go out there and establish like price discovery through the automatic market makers, the AMMs, and provide like some kind of price discovery, volume of activity, that sort of thing. The issue with compromising those in any way is a lot of code and a lot of smart contracts are predicated on their delivery of that information. They're oracles, just like you would understand like an oracle would be like giving you some version of the future of what's going on, you know, based on all this information it has. So Chainlink Oracle brought up this comment or this thread this week. This was the last piece I'm going to give you guys, and then we'll wrap this one up. On this kind of activity being a concern. And what happened is Chainlink came back and was like, hey, bro, our Maker came back and said, hey, bro, like you're misreading this. He came out and said, this was the thing that kicked it off on July 2nd. Maker oracles appear to be selling exclusive rights to post their price data on chain to an insider group. So this group makes millions by being the only entity to liquidate positions on protocol that uses MakerDAO oracles without any delay. So he comes out there, puts all this stuff out here predicated on this, and is saying, you know, because the oracles just sign off the price data off chain while the relayer needs to post it on chain. So what they're saying is they can get a competitive advantage by pre-signing these things and being ready before they broadcast them. So it gets them out of having to have any presented risk on making that information known, because they're doing everything kind of offline, getting it all set up, and then just instantly settling these things for liquidations. Now, what happened is Oracle came back, or the MakerDAO came back and said, hey, bro, like, this is our response. Like, we're not actually doing this. We had to go to production, and we did a limited kind of crawl, walk, run. So they came in here and said, well, I'll make sure you guys have these links too, by the way. But Maker came out and said, hey, we do not participate nor benefit from liquidations. You know, they are able to fix a particular issue that looked like there was what he was claiming. But bottom line, here's your context, and I'll let you guys get into this. They had to do a patch of the gossip network. So Scuttlebutt is the gossip network that makes this work in the background. And they explained what they actually had to do. And it came down to this, you know, this thread has about 2,000 views, but I wanted to make it known for anybody that's really trying to track how this information gets shared, you know, on chain. And what they were showing is that a lot of these Oracle services, you know, from like Maker or Chainlink and any of these kind of things are very complicated, you know, kind of middleware services that are sitting on chain, right? They're providing some data input that makes the kind of things that we all use, like if we're using any of the wallets and we're doing swapping and all that stuff that's like predicating some of that pricing and it's getting the pricing data. These are kind of the back end systems, right? So what they kind of come through and show is saying, hey, we did a crawl, walk, run on our launch. We did have this state of that first launch that gave the illusion that we were pre-selling data. But they came out and said, hey, we're not doing that. Here is fully launched now. We're not doing that. So not to put down Chainlink God's pursuit of this, but this is the kind of stuff that I like to look for. I like the folks that challenge this stuff in the open. And yes, it sucks that these folks have to come out and write these, hey, rebuttals. We're not actually doing that. But if you're operating in a $200+ billion DeFi marketplace, it is these, you know, folks that are writing this job to make sure people understand what the hell is going on. Because even if you come out and you say, oh yeah, totally bros, we're not doing that. Yep, nope, here's the way it works. Doesn't mean that somebody can't get some kind of arbitrageable opportunity if they are an insider or know about it. Like, we don't know if somebody worked there and then just called somebody and said, hey, we're in this crawl, walk, run stage. Technically, you could exploit it in this way until we go fully live. And that's the risk. And that's what I'm bringing up here, is to give everybody kind of spatial awareness that, you know, if you're a developer in this space, if you're watching this video just to hear the response to this, it is on that responsibility of, if you're going to take the ownership of building stuff like this, you got to make sure you're effectively communicating it and putting it out there. Now, it's everybody else's responsibility to kind of find that, but you put that on your website, you put a blog. This is what Coinbase does with their, and I'm not definitely tugging on Coinbase's whatever, but they have a Coinbase blog, and when they're doing big things, they put it out there in the blog. Right, wrong, or indifferent, you could hate them or love them, but they're putting it out there. And that's the best thing you can ask for from any kind of company that's trying to build something on one of these chains and provide value, is on your features, on your updates that have some kind of implication or effect. Now, there is, I would call it some stuff that needs to be kind of held back. Sometimes the only things that would need to be held back is that if you are crawl walk running something, there is risk somebody could exploit something if you gave too much information before you get it fully deployed. Since these are open systems, you do got to consider that. And if that's the case, I mean, you can come out there and just say, hey, you know, we have this, we're releasing this piece. It's going to come out in phases, right? You don't have to tell it what it is, but you're at least being transparent that this is one of 3 phases, without a lot of the core detail. And I think that'll get you around having to come out here and write complete write-ups on responses to accusations and types of things. So just some shameless plugs on that, guys. Trying to make sure you guys are aware of what's going on in the crypto space. This does affect anybody that's messing around with Ethereum or any of that, just because it is the integrity of the back-end systems that make all this stuff work, or not work for that matter, and bringing you guys up to speed on that. Back to crypto content that's specific to mining and GPU stuff this week. I'm going to wrap this one up. It's been about 26 minutes, trying to make it quick. Thanks, guys, for your I saw a few Twitch Prime subscribes coming in there, Ergo, and a few other folks. Thank you guys for that. We roll that back right back into the channel. I hope you guys have a good 4th if you're in the United States, and I will catch you guys later.